Good afternoon. I hope you all had a great day. First off, as always, let's take a look and see how the market performed today. The S&P had a strong day, getting 1.15%, jumping right up from the open. The Dow had a strong day too, being up 0.89% on the day. However, no index has been performing better than the tech-heavy NASDAQ this year, as the NASDAQ is now nearly even on the year. Gains from Facebook, Amazon, Alphabet, and Apple have helped lift the index back into positive territory for 2020. At one point, the NASDAQ was down more than 25% year to date. Today's move higher came even after the release of even more dismal employment data. Weekly jobless claims data show more than 33 million Americans have filed for unemployment benefits over the 7-week period ending May 2nd. On Friday, the Labor Department will release its monthly jobs report. Economists polled by Dow Jones expect more than 21 million jobs were lost in April. Michael Schall, chairman and CEO of Marketfield Asset Management, said the market's recent moves, which have been tame compared to others seen this year, suggest, quote, an understandable fatigue with the constant stream of conflicting information about the process of the virus and potential for happier, more drastic outcomes in the months ahead. It also suggests that the relief that the worst-case medical scenarios are likely to take place is being replaced by an understanding of just how daunting the task of reopening and rebuilding economies will be in the coming months, leaving the SPX unable to move up and challenge key resistance at 3,000. There were some big positive jumps today in the S&P 500, none bigger than the jump made by Fortinet Inc., which went up by 21.2% today. Fortinet Inc. develops and markets cybersecurity products and services, such as firewalls, antivirus, intrusion prevention, and endpoint security. Fortinet rose due to its earnings, which they reported yesterday after hours. The company reported first quarter net income of $104 million, or 60 cents a share, compared with $58.8 million, or 34 cents a share, in the year-ago period. Doubling net income in a year while being profitable is a feat that not many companies are able to pull off. Fortinet chairman and chief executive said, quote, our proprietary 40 ISIC security processing unit can deliver 10 times the VPN throughout capacity of comparable competitor solutions to support teleworkers. This significant competitive advantage is one reason we believe we will continue to gain market share during a period of tougher economic conditions. The other big move was made by Lincoln National Corporation, which jumped by 16.12%. Lincoln National Corporation is a Fortune 250 American holding company, which operates multiple insurance and investment management businesses through subsidiary companies. This move was due to earnings coming in above estimates. Dennis R. Glass, president and CEO of Lincoln Financial Group, said, quote, first quarter operating results were strong during a period of rapid change. We have been focused on doing what is best for all our external stakeholders and employees by prioritizing health and safety while ensuring our business operations and customer service are strong. We came into this environment very well capitalized and are confident that the strategies we have in place, combined with the actions we are taking, will drive long-term shareholder value. The biggest loser today in the S&P was Welltower. Welltower is a REIT that mostly invests in senior housing, assisted living, memory care communities, post-acute care facilities, and medical office buildings. It also owns hospitals and other healthcare properties outside the United States. The company announced that the senior housing operating portfolio, which generates a significant portion of the net operating income, has been witnessing a decline in occupancy. The occupancy level fell from 85.8% as of February 28th to 85.4% as of March 27th. And this declining trend is likely to prevail, given to limitations in many of its communities, as well as checks on resident move-ins. They also announced that they would be cutting their dividend, so they would be able to purchase some of their own shares. Unusual move, and not something that would be taken too kindly for the kind of investor who invests in REITs for a high-yielding dividend. The other big loser for the day was Weston Holdings. It is an American food processing company that is one of the world's largest producers and processors of frozen French fries and other frozen potato products. The 5.7% downward movement was due to the company announcing a total of $500 million in senior notes due in 2028. They would be paying 4.875% of these notes. The company intends to use the net proceeds of the issuance of the notes for working capital and other general corporate purposes. Taking a look at the sectors, everyone had a good day. Oil and gas and basic materials led the way today, being up more than 2.5%. Financials and industrials were not too far behind. Taking a peek at our helpful table, it is clear that everyone had a great day, with growth leading the gains again. However, no one had a terrible day. Looking at currencies, note that the US dollar weakened today, as investors book profits on the currency's gains this week before Friday's US non-farm payrolls report for April, which could show massive job losses amid a COVID-19 pandemic that has ravaged the global economy. Over this week, the dollar index was up 0.9%. The U.S. economy is expected to have lost about 22 million jobs last month, with an unemployment rate of 16%, according to a Reuters poll. Getting into earnings, we start with Uber. Ticker symbol UBER. Uber is an American multinational ride-hailing company offering services that include peer-to-peer ride-sharing, ride service hailing, food delivery, and a micro-mobility system with electric bikes and scooters. Uber reported a first quarter March 2020 loss of 64 cents per share on revenue of $3.5 billion. The consensus estimate was a loss of 79 cents per share on revenue of $3.3 billion. Summing this up, revenue was higher than expected and losses were lower than expected. Note that revenue grew 14.3%. This week, Uber laid off about 14% of its corporate employees, about 3,700 people, to cut costs. Gross bookings for its food delivery segment, Eats, were up more than 50% year over year as more people ordered food for delivery at home, and a greater variety of restaurants signed up to offer delivery. The CEO noted that ride volume has been increasing in the past 3 weeks as Uber took a hit in rides due to the coronavirus. Investors responded very well to this news, selling the stock up 6% after hours. Roku, ticker symbol ROKU, is a line of digital media players. The devices offer access to streaming media content from various online services. Roku's reported earnings for its first quarter of 2020 met estimates for its loss per share, but beat on revenue. As more people have been staying inside in the pandemic, Roku said it gained 2.9 million incremental active accounts in the quarter, reaching 39.8 million total, a 37% increase year over year. It also saw streaming hours surge by 1.6 billion, bringing it to a record 13.2 billion hours, a 49% increase year over year. The coronavirus pandemic has caused advertisers to pull back spending on many platforms. Roku CEO said, quote, "In summary, while our advertising business faces near-term challenges, our content distribution business as well as overall consumer engagement have benefited from a surge in OTT usage. There can be no assurance that these patterns will continue through the remainder of the second quarter or throughout 2020. However, we believe that they may represent an acceleration of the longer-term trends reshaping the industry that were already well established prior to COVID-19. Roku took a hit in after-hours trading, but has still performed very well during the pandemic. Dropbox, ticker symbol DBX, is a file hosting service that offers cloud storage, file synchronization, personal cloud, and client software. Dropbox beat on both adjusted earnings and revenue, sending the stock up around 3% after hours. The company said that coronavirus quarantines and the encouragement of remote work will help its business, even as the lockdowns end. Dropbox CEO Houston said, quote, "Certainly, a huge percentage of the world is being forced into a remote work state for the first time, but I think the effects of it will persist well beyond when we typically go back into the office." Note that revenue grew 18% on a year-over-year basis. Thank you for watching. I hope you all had a great day.